Director again, Simple CFO Solutions, and in this segment we're going to be talking about practical ways to know your numbers. So in the first two, kind of gave you the overview of myself and then kind of the benefits of knowing your numbers and why you need to know your numbers. So in this one we're really going to dive into practical ways to know your numbers. And especially I'm going to hit this kind of from the owner's mindset because I'm an owner first and foremost, and I know what numbers I want to see, and I want you to be able to express clearly what you want to see too from the people that are maybe on your team getting you these numbers, or if it's you by yourself, what do you really need to see and what can you get out of that? So practical ways to know your numbers. So what numbers you should know? Number one, net profit. And this one is a lot that entrepreneurs already know. You probably need to know your net profit, but do you know if the net profit number that you have on your bottom line is even the true net profit? Expenses, overall in property. So your net profit, I like knowing the net profit for the overall business, but I also like knowing it for the actual per property also. So that means that if you have a bunch of properties that you're selling, you would be able to pull a profit and loss report by, and that's also called a P&L, profit and loss, per property and for your overall business. So you should know your net profit, your expenses, and that could be per property. Like if you're doing a fix and flip, I'm going to show you an example here in a second how that can be laid out. And any number you really want to see. And I'll also add on to there, not just what you want to see, but like you'll want to know what your assets truly are too. You'll want to know your balance sheet, and we'll go into that a little bit also in the near future here. But those are the numbers you should know. Your net profit for your overall company and your property, the expenses, and any number you want to see. Because I know a lot of investors that are they think differently. Every investor thinks differently. They want to see different numbers, but you need to make sure to know and drill down. These are the numbers I want to see from my financials and be able to get those in front of you. I'm going to go over some general ones, but if you're working with a good bookkeeper or someone on your team that really knows what they're doing, they should be able to get you any number that you want to see out of your business as far as it goes on the financial portion, since that's what we're talking about mainly here. So the first thing, the chart of accounts. Now I told you this wasn't going to be boring, and I promise I'm going to keep your attention, but we need to start off at the chart of accounts. For anyone who's taking this course who doesn't know, this might be your first deal that you're foraying to. And even if you're doing a ton of deals, I've seen people who are literally doing 5, 10, 15, 20, 30 deals a month not know some of these things that can really affect your business. So that's why I wanted to go over the chart of accounts, because it's not just for if you're a newbie or if you're an actual seasoned, experienced investor. You need to make sure your chart of accounts in your software is set up correctly, or if you're using Google Sheets or Excel or something like that, just knowing where some of those expenses need to go. So your chart of accounts inside of a QuickBooks type software is a part of the accounting function where you actually input the different line items or the expenses that could happen. So let's just say one of those line items is marketing. So anything that's marketing related could go into that marketing line item. So that's kind of what I'm talking about here. It's those chart of accounts and setting those up. So number one, make sure you or someone on your team knows how to set this up. Because number two, the biggest mistake I see in the real estate investing world after doing this with many clients and many people now is that sometimes when they don't set it up correctly, they don't know that every single expense shouldn't be hitting your profit and loss. And you say, that doesn't make sense. It's an expense. Shouldn't everything be hitting my profit and loss? Not exactly. Because if you purchase a property, as a real estate investor, we do things a little bit differently than buying and selling widgets or things like that where it's just in the door and out the door, and they're not maybe holding inventory, but you are actually holding an asset. You are holding a property. So even if you're fix and flipping or buying it as a rental, once you buy that property, let's say for the sake of illustration, you buy a property for $25,000 and it's 123 Main Street. On your actual books, it's going to, in the chart of accounts, you should set up an asset account for that property, because anytime that you purchase materials, you pay someone to work on the property, you pay a contractor specifically for that property, you've got utilities for that property, anything that goes to that property before it's sold or before it's marketed for rent, if it falls into those one or two categories, every single item expense that goes onto that property should go onto that property's what's called its basis or on its chart of accounts account. So if you set up 123 Main Street as an asset account inside of your business, like your QuickBooks software or Xero or Waves or whatever software you're using, or a Google Sheet. If you set up an account for 123 Main Street, all the expenses should go on that account until it's sold or it's marked for rent. And I know there's a couple variables in there, but that's the general overview. So that's one of the biggest mistakes I see, probably something that could save you a lot of time right there if you just take that one tip. Properties and loans need to be on the balance sheet. So I say that in general too, because I can't see every single situation all the time, but 90% of the time, all of your loans and all of your properties are usually going to end up on the balance sheet at one portion of your investing career. So when I say that, the difference is if you're wholesaling and strictly wholesaling, that's a little bit different, because unless you're doing where you maybe purchase it and sell it the same day and you do double closes where you're actually buying the property, we're not talking about that. I'm talking about an assignment where you get the piece of paper and you actually assign that contract to someone. That would never hit your balance sheet, because all you're doing is selling that piece of paper. You're not holding an asset. You're not getting a loan, because if you're just assigning that piece of paper that says you have it under contract for $20,000 and you're assigning it for another 20, and you're getting that's actually never hitting your balance sheet. And we're going to go into the difference between a P&L and a balance sheet here in a second, but that would never sit on that side of your business, because it would just hit your profit and loss, because you're never actually purchasing that property. So I know we got into the nitty-gritties a little bit there, but I see that as one of the biggest hindrances, and it's one of the things that can actually be set up very simply. You just need to know what you're doing. So hopefully this course gives you a little that wherewithal to be able to set that up correctly. So reports. So first, chart of accounts, make sure that's set up correctly inside of your book, so that way any entry that goes into any entry that hits your bank account should be accounted for in your numbers. So any entry then will now sit on the chart of accounts in the proper area, and if you know where to put them, or if your bookkeeper should know where to put them, or otherwise you're not working with a good bookkeeper that knows real estate investing. The second thing, the big thing you need out of that software and knowing your numbers and practical ways to physically know your numbers as an owner is the reports. That side of your business is big on getting the reports that you need. So what reports? What do you want to see? So first of all, kind of sit down and take a 20-30-minute session and say, these are the numbers on my finances I really want to see. I'm going to give you some that I think you should see, and they're probably going to line up, but there might be other numbers you want to see. But make sure you clearly define the expectation with your bookkeeper or anyone on your team that's doing this. Or if it's just you as a solopreneur out there by yourself that is doing this on the side for now, know what numbers you want to see inside of your business and set up a system. It's so important to systematize everything so that way it's an actual business, but it's important you create a system to get those numbers, because you need to see at least your profit and loss. Know where your company stands from a profitability point of view, and what expenses are you actually doing. On the P&L, there's two main items, your profit and your income at the top, and then your expenses at the bottom. So that is really the big thing on the P&L that really goes there. Anything that's an income or expense to your business. That's why I was talking about number 3 there, the balance sheet, is where your assets and liabilities and your equity sits. And your assets are anything that you purchase and hold, or purchase and hold until sale, like a property. So that's your assets. Those are things that are an actual asset to your business and are on the balance sheet. Your assets could be properties, or it could be your bank accounts, or things that are actual assets to you. Because money in the bank for you is an asset. You can use that money. Another thing on the balance sheet is your liabilities. Let's say you buy a property for $100,000 and you get a $100,000 loan. And so that $100,000 of purchasing that property is going to sit on that balance sheet under the asset portion with that 123 Main Street. But then let's say you get a $100,000 loan. Where does that go? Well, that's on the liabilities portion of your balance sheet. So now you see I have a $100,000 property and I have a $100,000 loan. Now, you might say, well, what does that really mean? Can I now see if I'm into it, or if I know that loan to value? Well, that's where outside of that you would need to know what the ARV, or the after repair value of that property is, to know how much you're actually into that property. If that property's worth $100,000 and you're only into it $100,000, that's 2/3 of what you're into it, like 67%. So you've got a 67% loan on that property too. You could even get a little bit more money if you wanted to, but then you're getting more more than what you actually purchased, and that could be in the repairs, and you could get a loan probably for up to 75, 80% if you really needed it. But I'm just trying to give you examples of where things might sit on your actual books. So the balance sheet holds the properties, it holds your loans, and it holds any equity. Let's say you take a draw out of the business and you're not set up like to take an actual salary, but you're taking draws. Your draws would sit there, or if you've invested money into the business as an investment, that would sit on your equity portion on the balance sheet. It also goes over what your retained earnings, what that is profit from your past years. So that also is shown on your balance sheet too. So your balance sheet is way more important, and I wouldn't say way more important than your profit and loss, but it's more important for you as the investor to really know the balance sheet, because that is where your true wealth sits. If you don't get anything else from this particular course, your balance sheet is where your true wealth sits. So, saying that, number 4 there, cash flow, that's another statement that's kind of where a lot of people don't dive into that as much, but you actually in some of these softwares have a statement of cash flows that you can pull to see what money really went in and out of your business this month. So that's another report that you might really want to see. Okay, this can explain where your money actually went inside of your business. And that's another report to really see. And that's where I'm going to give you kind of a little insider tip on how to pull that for a property so you can see the lifetime of that property, where the money went on that property. So this is an actual bonus too for the reports. There's, in a lot of these accounting softwares, if you use QuickBooks or Wave or Xero, FreshBooks, there's a lot of different accounting softwares out there. But if you use one of those, they usually have the option for cash versus accrual. Cash means that those are transactions that have actually happened, money in and out of your account. Accrual is like if you send out a bill, but that bill's not paid yet, then that actually would go into the reports on your profit and loss or balance sheet, like those outstanding bills or invoices. Like if you invoice a tenant to pay you through QuickBooks, if you run a report on accrual basis, it's going to take anything that's even outstanding as like an invoice as income to you, even though you haven't received that money. I don't like the accrual as much as cash. So all that to say, run the reports usually on cash. I'm just, as a general rule, you probably want to see that. The accrual would help you see how much do we have outstanding, and then it will also kind of help you predict too for future budgets or whatnot. So there are pros to accrual and there are pros to cash, but for the most part, you want to run these reports on the cash basis. What money has actually come into your account, what money has actually gone out of your account, so you can see on your profit and loss and on the balance sheet. So reading the reports. I want to actually give you examples of reports first before I go into all of these. So on the screen is an actual, if you click on that link, or if you actually go to that link, type it in your URL bar at the top of the screen. If you go there, I give you access to some of these spreadsheets where it goes over the P&L. So in this next slide here, this is the actual sheet you'll see, and you'll see on that profit and loss where the revenue is, or the income, the gross profit of the company, the expenses, and the net income. So a regular P&L, I had to do it on 2 different columns there. Usually it's just one sheet and it shows you from top to bottom, the top being the income, the bottom being the expenses, and then at the very bottom is your net income of what your company actually did. So in this scenario, this real estate investing company made $1.25 million in their top line. So that's what they brought in. And then in their actual gross profit, meaning in the gross profit is usually where all the expenses, if you see on the screen, the cost of goods sold includes one of the categories, house purchase, COGS, cost of goods sold. That's where we like to put the actual purchase price of the property and where everything that went into a property. So as you can see, that top line, that $750,000 of sale flip income doesn't mean they made $750,000. That means that's how much they sold those properties for, minus the house purchase COGS. So like $750,000 minus the $630,000 would give you more of what the gross property profit was for those properties. So that's just a little bit about the profit and loss and looking at that. that, and you can really dive into this. This is where a great bookkeeper or someone who knows the financial aspects of your business can help you dive into those numbers and give you gold out of there. They can literally give you money back by saying, here's where you made money. Let's just take the example here, fixing and flipping. Let's just say fixing and flipping, you know you made $100,000 over a couple deals here, 3 or 4 deals, but it took you the whole entire year, and you did also wholesaling properties too, and you made $100,000, but you did 10 of those, and you did that across the year. So you can see now how much did you make per property on how you actually, what were your exit strategy was, how much did you make on it, what was the time invested in that. There's a lot of good information you can pull out of your financial data, which is why I'm such a big proponent of this and why we're doing this whole course. I want you to be able to look at these numbers from your bookkeeper, from yourself, and say, this is what I can take action on that my numbers are telling me. And then at the bottom and to the side, if you're on the actual screen right now, you see at the bottom is expenses, and then to the little picture on the right is the expenses also, and those really go what goes into running the real estate business. So as you can see there, like accounting services or advertising, bank charges, charitable contributions, you've got telephone, taxes and licenses, travel if you're doing travel to go out to places and speak, or whatever you're doing for your networking. So you can see that those are the actual expenses to run your business, not what it took to actually do your property. Because like I said, for a property that sits on the balance sheet until you sell it, and then it goes into the income and the cost of goods sold lines, basically above your expenses line. Another one I want to give you is a property profit and loss. So if you go onto the screen and see it's property, it's the Bitly property profit, so you'll actually have access to see what a property profit and loss would look like. So that's what it is, and it can be very simple. The P&L can be simple. You'll see where I actually dive into where it was spent over the lifetime of that property to get to this number and how you can actually track that. But a property P&L should be fairly simple. It should be, what did you sell this property for? So $175,000 minus what you were into that property, so 110. That could be purchase plus repairs plus utilities plus anything that went into it over the course of that actual property, plus any interest that was paid at closing. So I put that on another line just so you can see what it was actually the interest you've paid over the course of the year to, if you've held that with a loan and then you had to pay that interest out at the closing. So you can see it's the 175, what you sold it for, minus what you were into it, 110, minus what you were into it for the interest, and then your gross profit is 50, but then your net profit for that property is basically 50 grand too, because that's just for that property. It doesn't take into account like the rest of your business as a whole, like if you have employees or whatnot. This is just to pull what did we do on this specific property and how much did we make, which is another powerful report to know, are my properties profitable? You can do this with a rental too. You can actually pull a report if you're tracking it appropriately inside of QuickBooks or some other accounting software and see, even though my property is on the balance sheet, you can pull a report over the lifetime of that property and see, is my rental actually profitable? Are we making money on a monthly basis or a profit on a monthly basis? So you can actually pull this for fix and flips, like when they're done, or a rental as the lifetime of that property goes about. But I just want to let you know that you have there access to that property P&L, kind of what one that's done would look like. Example property expenses. This next one, if you go to that link, I'll give you another example of that so you can actually take something away from here and have an example. Because this is what it looks like. It's very tiny, so on your screen you might have to zoom in, but literally if you set this up correctly and you're apportioning every single dollar that you spend on that property over its lifetime, as long as the bookkeeper or you have a system, there's that word again, for having a system to input your expenses, then what you can actually do is in a lot of the software, it lets you run it by class or customer, however you apportion out that property to make sure you have a category that fits that property. So let's say you're assigning everything to 123 Main Street. Well, then anything on that, you should be able to pull a report by the statement of cash flows, where in this particular example, we set up the actual property as a customer. So that way, anytime anything that went to that property, we would put the customer as 123 Main Street, and across the board, you see across the top of the actual spreadsheet, it has like basis, dump fees, home insurance, HVAC, loan interest, pest treatment, the purchase price, the sell price, settlement fees. So you can see those different columns. What that does is we have different classes where we have general categories of the buckets where it can fall into, like is this a repair, or is this a, like a utility or a recording fee, or is it a settlement charge? So you can actually set that up in the QuickBooks softwares or these other softwares where you can pull reports by a customer and a class, specifically the statement of cash flows, to see over the lifetime of a property, where did you spend a lot of your money? So here they only spent 11 grand on the purchase price, this non-existent company, but the example company. But then for subcontractor labor, they put 30 grand into it. They put $30,602. So you can kind of see at a glance what they put into it for subcontractor labor, but their supplies and materials were $26,000. So in this example, you can see where do all the expenses go for this particular property. That way you can see, am I on budget? Am I on time? Do I know where I'm spending my money? Where are the different things going for this particular property? And those are just an example. You can set up more, of course, or less into bigger buckets if you just want to see how much did I spend on labor, how much on materials and whatnot, or you could break that down even further into specific categories, like this is what we spent on trim or paint, or you can get really technical. That's why I go back to a couple slides before. What do you want to see? What do you want to pull out? I want to make sure you know what you're wanting to pull out of your properties and out of your reports. Okay, an example balance sheet. So this is what a balance sheet is going to look like. So if you go to that link there, I give you another example of another report. So I had to split it again between the two pictures, and this is usually what a balance sheet will look like. This is just an example, but it usually has, as you can see, the bank accounts are listed there for a company where they might have different accounts for, and I actually give Profit First accounts there, so we're going to talk about that in another module about Profit First and how that fits into your financial portion. Profit First is a book by Mike Michalowicz. You probably want to pick that up too. Very great book on the financial portion of your business. But not to take away from the balance sheet, we have the bank accounts at the top. Those are assets. You've got houses there too, 1, 2, 3, 4, 5, 6, 7, up through, I think, 15 Main Street there. And you see some of them have 0 on it, and some of them actually have a dollar amount. The ones that have a dollar amount mean you haven't sold the property yet, or it hasn't actually hit your profit and loss yet, meaning you have acquired assets that are on your books, whether they be rentals, whether they be fix and flips, and you can even apportion that out between rentals and fix and flips, between sub accounts inside of QuickBooks. So you can get really, really detailed on your numbers. The more detailed you can be, the better. But if you just need a starting place, this is a good starting place to be able to say, my houses need to go there until I sell them or until I rent them, and then a lot of the expenses can be put on the profit and loss. That's a little bit more advanced. But I just wanted to let you know, the ones that have a 0 there on the actual balance sheet, the example, that means that you've probably sold that property and now it's no longer on your balance sheet, and then at the end of the year it kind of gets cleared off your books because you've already sold that property, doesn't need to go into the new year. On the right side, we have the liabilities and equity, which could be credit cards. It could be your lenders, Mr. and Mrs. Investor 1, 2, 3, 4, 5, and what they've lent on your properties. It could be mortgages that you have with a bank, but then it also has equity there. So like the opening balance equity of 150, like what did you have when you first started the company? What have you put into the company yourself? What have you made from the company, like retained earnings? Owner's draw, as you can see there, what have you drawn out of the company for this calendar year? And then you can see that the liabilities and equity at the bottom of the actual, if you see there on the balance sheet, has $1,105,000. And also on the assets, those should always be the same. The assets should equal the liabilities and equity. So if you're ever wondering, if you're doing this on a spreadsheet yourself, it's going to be a little trickier because QuickBooks and all those online services do that for you automatically, making sure that they balance out. But if you're doing it on a spreadsheet yourself, you want to make sure that those two numbers balance out at the end of the day. Okay, so this is just another way that the reporting and everything can help you. Let's just say you take those reports, those are great. Now you know your numbers, you know exactly where you stand, but now what do you physically need to do? You need to meet to discuss your numbers. You need to go through your profit and loss. You need to get the leadership of of your company, even if it's you and your wife or you and just maybe that you're going at it on your own, you need to be on the same page with your numbers. Address any discrepancies. If particularly profitable or negative, see if you can pinpoint the reason. If you say, hey, we had this huge deal that closed, but that all the other properties that we're closing aren't making us that much money, you need to kind of see, where is that coming from? Why are we really profitable, or why are we really negative? So you need to kind of dive into your numbers to see, is there anything we can pinpoint? Did we make, because that's why I say you should have a P&L per property also, because then you can see, did we make $100,000 on this one property and $1,000 on everything else? Like, how did we make that $100,000 on this property, and can we repeat that? Can we make it a system? That's why I like to meet to discuss your numbers, discuss them at least once a quarter, but you need to do it maybe on more like a monthly basis or even a weekly basis, depending on your size business. But have an action plan after the meeting. If you don't get anything else from this one particular slide, is to take action. I am huge on that. You need to go out there and actually make something happen. Don't just look at those numbers and say, this is where I am currently. Oh, that's great, we made profit. Or, oh man, we are in the hole. That just really stinks. I'm so stressed out now. No, you are in control. You can say, this is what we can do to either cut our expenses or really boost our profitability. And I really want to make sure that us as a company, that we can make this happen. We can go out there and actually have that confidence, like I was talking about before, the confidence now in our numbers to make realistic decisions that could either transform our business or really hinder them if we don't act on it. So I just wanted to really hammer that one home. Meet on your numbers, discuss them, but then have an action plan. Maybe if you've got a bigger size company, you apportion different parts of the balance sheet or the profit and loss to someone to say, you're responsible for this number, how do we make it better, or how do we cut this expense? Because I'm not just, a lot of the accounting people you run into are probably like, I just want to cut all the expenses, you can't do this or that, where I'm like, no, spend the money that's going to return that revenue back into your business. Because the real companies that are out there have a system to say, not only do we know our financials, but we know them well enough to know where to actually spend money in the best way possible to return the highest dollar amount. So that's why it is so important to know your numbers, because you can take that into action and say, I'm going to be a more profitable company. So it's story time again. So I've worked with another investor who, in a very similar situation, did not know his numbers. So he didn't know where he stood, didn't know if he was profitable, had been in the business for several years. Well, it turns out they were actually profitable, but they didn't know that on the balance sheet was where all of his owner draws were. So if we took that out of the actual profit on his profit and loss, he wasn't making much money at all. He was almost about break even. So then he wasn't just looking at the P&L saying, okay, we made this amount of money, and so we're good. We should be good to keep going. Yes, but we had to also look on his balance sheet and say, is there anything else that is actually coming out of your physical account, but that's not being apportioned on your profit and loss? Well, we saw that. We actually saw that, and we're able to say, yes, here's where some of the other expenses in your company are sitting, but they're not on your profit and loss, they're on your balance sheet just because of the nature of the draw and the way that his business is specifically set up. So he was able to take that and see, okay, I'm actually more at break even. So that kind of lit a fire under him to say, I need to get more properties, or I need to be better at the marketing. And then he actually went out and set up like a daily meeting to go over what are we doing to get properties, and then he let his acquisitions team run with that and get on the same page there. And they were actually able to take actionable steps from that meeting to say, what can we do to make our bottom line better? Because he kind of thought, oh, we're doing okay. But once he actually saw that number, it lit a fire under him. That's why I tell you these stories. It's real life examples of real life investors who sit where you are. They're not a huge company either. They're probably doing 10 to 30 deals a year. So it's not like these are companies that are way out of your league, because even if you're an entrepreneur or real estate investor doing 1 or 2 deals just in a year, if you know these numbers up front, you're going to be able to see that you can make those better decisions for yourself now in the stage you are, or once you get to those 10, 20, 30 deals, not having to be like, okay, now we need someone to come in here and tell me where we are currently, because now that you have those tips and you know what you need to be looking for, you should be able, no matter what stage you are in, be able to say, okay, it looks like we're profitable, but we're taking money out of the business over here too, so we didn't really know if we were actually profitable or not. So I say all of that so that way you know that you, at the end of the day, where do you really stand, and can it really light a fire under you? Or do you say, we are doing really well, and now we can dive into our business and keep that system churning the properties out, and now we know that we're profitable? Or are you in the hole? Do you see that you've made money on these properties, but your expenses are so out of control that you're just spending money left and right on every single course that comes out, every single this or that or the other thing, that you're not actually taking that into account? When you make 20 grand on a property, are you apportioning that to make sure you can still be in business and not just draining your account on everything that comes available to you? But you need to make sure the money that you're spending, number one, is it going to return an investment on you, on the money that you actually put out there? And number two, is it something that's actually going to push your business forward? Because I realize that sometimes it's hard to quantify if it comes back to you in actual revenue. But then there's a lot of things like giving and charity, where things like that you may not see it come back to you monetarily, or you might see it come back monetarily, but it helps your business grow in ways that you just really don't have any idea how it could. So I just say all of that investor with that story, that once they actually knew where their numbers stood, it was able to light a fire under them to get really going, because they were kind of in the place where they thought they were making more money than they were, and then at the end of the day, they really didn't know. So again, Less Stress, More Profit. If you want to pick up that book, just goes into it a whole lot more. And I really appreciate you sticking around for this third video. I hope this one really helped you. And I hope that as David Richter, the Simple CFO, I've brought value to you so far. Hopefully this helped you practically know your numbers and how you can dive into them. And that way you can see, as an owner, where you are actually getting your numbers, because we didn't dive into a lot of the nitty-gritty of the actual entries or things like that, because a bookkeeper, or you can find a lot of that on even QuickBooks, has a lot of good videos on that. What we were talking about here is, how do we get to that end result that you really need to see as the owner? Practical ways to know your numbers, practical ways to work with a bookkeeper to tell them, this is what I want to see, make it happen. And that's where you can come in as an owner and say, I know where we stand, and I know what our numbers are, and I know I can take action on those numbers now. Can't wait to see you in the next course.